Okay, welcome everyone. Good evening, good afternoon, and good morning to all of you. Good morning to those of you connecting from Australasia. Welcome to the Street Tokyo Open Live Room. The speaker is Giuseppe Basile, also known as the FibStalker. I'm glad to welcome you to today's session. Thanks for joining in, Roland Kerry, Dan, BW, Adinda. And there is also Mr. Carrillo. Welcome. Welcome, everyone. Hope you had a great day. And it has been a volatile day as it happens for these kind of days. And what I want to do, I want to start the way, just remind you that this is a daily show where we feature real trading at the very heart of the Asian session with the FibStalker with me. This is a daily show going from Monday to Thursday, 7 p.m. to 7:45 p.m. Okay, so I hope to see you often. As you know, we take risk very seriously here in this show and market review. Trading is risky, as you know, and I like to read an excerpt of the risk-free disclosure here every time. Trading Forex and its derivatives, futures and options, CFDs, and other instruments with retail of exchange transactions involve substantial risk of loss, and it's not suitable for all investors. You may lose all or more of your initial investment. Leverage can work for you as well as against you, magnifies gains as well as losses. Past performance is not necessarily indicative of future results. Please also review the FS Street risk disclosure on the website. The information, including commentary and trade ideas provided in this webinar, should not be relied upon as a substitute for extensive independent research which should be performed before making your investment decisions. The information I provide in this webinar is for you and for your general information only and educational purposes. I, Giuseppe Basile, FibStalker Consulting Incorporated, which is my company, and FX Street will not be responsible for any losses included in investments made by attendees as a result of any information in this webinar. And I want to say hello to you. Thanks a lot for joining in here. And I want to actually very briefly touch on one important topic here, which is leverage and risk. Obviously, the two are connected. Today, I was having a conversation with a trader I know. He has been on the lookout for a number of years. Apparently, has not found a system that that actually fits him. But he also asked me which broker I use. I use a number of them. One of them is Pepperstone in Australia. And and actually the question was which kind of leverage the broker offers. And I say, well, I mean, it offers the typical leverage that anyone will offer: 1 to 20, 1 to 50, 1 to 10, 100, 1 to 200, and up to 500, or even 1 to 1,000. And the point is, and I asked, but why does it make a difference to you? He said, well, I mean, if I have more leverage, I can have less money on the line, and I can get bigger positions. Seriously, but what about risk management, though? Because, if you want to have 1/10 of the money to take a 10,000 position, just to, let's say a one lot, 100,000 position, right? And you have a 10,000 on the account, that's 1 to 10. If you have 1,000, so 1 to 100, which means that 1% of risk when you have an account of 10,000 would be equivalent to 10% of risk for the same position, same pip risk, and with a 1 to 100 leverage. So this is a simple concept, but it looks like a lot of people simply don't get it. I mean, trading is risky, and managing risk is the most important job of traders. If you don't understand the basics of leverage and risk management, you should just paper trade and get educated. So I'm sure that none of you and this is not a vent. It's just, yeah, very surprised that, you know, people who research the markets for 10, 15, 20 years never get to really understand risk, and it's simple concepts actually. To me, risking 10% and 1%, it's a huge, big difference. In fact, indeed, I would never risk 10%. Okay, so thanks for joining in, Vex Ambassador, Roland Carey, Dan, BW, Adinda, and Mr. Carrillo here. We also have Desi. Thanks for joining in. All right, so let's switch to our charts and let's look at what the market is suggesting us. First of all, I wanna mention the level on silver here, which has been respected. It has been tested actually twice here, the 1688, which means that for the time being, until that 1667, which I mentioned a couple of days ago, will be pierced, we are actually continuing higher in this market. And only if the level is pierced, we could see a retrace into 1570 here in this market. Okay, a quick look also at the SP 500 to see what's going on there. And this market actually broke, as you know, new highs. When we look at the weekly here, we saw for the first time after more than 1 year here, actually almost 1 year, new highs. And this market had a little correction here because there were a lot of people who entered this market because of new highs, and then the market corrected. This is going to continue higher. If you review a previous review we did last week, you will see that I mentioned a target at 2,217. That would be the first target of this area of support, and that found participation twice from program trading. Okay, dollar index as is still respecting that area of support despite today volatility. And as we can see here, every time this market has came into this below this 94.35, there was participation on the upside. 1, 2, 3. The fourth time today, because this market moved down into 94.11, but then there was a bounce higher. Let me take some notes here, and as you know, at the end of each review here, where I also give the setups, I also write a brief commentary, and there are some levels that you want to keep and you want to keep in mind for your trading. So we reviewed the silver very quickly, SP 500 and dollar index. So the dollar index is still respecting this area. It's still possible for this market to move higher. In fact, an opportunity to move lower was there today, but this market actually bounced higher and closed closed basically just below yesterday close at this stage, as we can see from the 4-hour time frame. Okay. All right. So I see the FX ambassador always ready. I see Australian US dollar and pound versus yen. I found the pound very interesting and the Australian dollar very interesting recently. As a currencies, there are some crosses I wanted to review today before I get into that. Hi Todd, welcome. We just started. We reviewed the SP 500, dollar index, and silver. Welcome Bart as well. And if you're new to the show, can also watch some of the previous reviews just to understand how the whole thing works. So before I get into pound versus yen, I'd like to review a very technical market that we actually have. We reviewed some weeks ago. And this market, if you remember well, had basically an area of participation, which was a 50% from 2013 lows. That area was participated beautifully, and I mentioned this in the past. This market bounced right at that 50% level, and it had, a very good week so far. And yesterday, today, and after it bounced from this level, it had very good, a few very good days here. Now, this is not going to continue forever. This market eventually is going to come in and correct, and I'm going to give you a level that you want to watch for a continuation higher. And that level is very important. It's going to be from this high to highs here. These 191.28 to 189.01 may seem a long way to you. Indeed, it's actually 130 pips here, but this is very possible. Sorry, I said something wrong. 1890. Sorry, 89.01, 91.13. So in reality, it's 210 pips. So this might be a long way to you, but this market, it's highly volatile. This market, along with pound versus Japanese, is probably the market that shows the highest average pips per session in all three major sessions. So the Tokyo, European Open, and US Open. Okay, so if you see this market hovering around 189 and the price stabilizes around that, I never buy blindly these levels. I use a proprietary technique called FibStalking timing, whereas I study the sequence of measured move of the counter trend into this level, and when that breaks, then that's an indication that the participation that might come from this level, it's actually relevant. Now, what is interesting is that if no participation come, you have no money at risk. So that's the important thing. You always have to try to manage your risk properly. Okay, so that's a level I want to give there, and I want to take a note here, and so we reviewed the pound versus Australian dollar here. Pound versus Australian dollar. If you are looking for the majors, we review also the majors, some of them at least, Euro dollar, US dollar, Japanese yen, and so on. So bear with me here. Today we try to cover as many as possible. So pound versus Australian dollar has a potential area of support around 189. Okay, again, whatever mechanism you use for timing, make sure that you get confirmation before you get involved. And that's a long, which is also supported by the weekly, because the weekly actually showed participation on the upside. And until the counter is shown, we have the potential to continue higher here. Okay. And there's going to be a level of resistance which this market has actually already encountered here, and that's the reason why it's holding. I don't believe this level is strong enough to keep the market from continuing its move higher, but it would be strong enough to cause a pushback into 189.01 here, and that's the reason why we are seeing this little bar here. When we study the divergences on another model here, when we apply another model to this market, we see that this market actually started forming the first part of potential divergence. So if this market gets into previous highs, remember that now here you have a resistance which comes from a larger time frame. You have to take the opportunity. If the market comes back into that 192.30 area here, that's a stub for a short into 189 level. Okay, everything's clear. Give me a yes, and let's get into Australian dollar here. Now, the Australian dollar is quite interesting. It's been very, very technical, and those who follow me know that this market actually has broken all the potential participation from longs, and there was one area of potential run up for this market, but only if that would be supported by a weak US dollar, which we're not seeing at the moment, and not against this currency, against the Australian dollar. Now, the dollar also, the US dollar can be weak, and the Australian dollar still be able to move lower anyway. So there are two areas of resistance on the weekly time frame. One is the 089.58, which has not been tested yet. The other one, it's 077.50, which has been tested on the other hand, and this is an extension chart which has targets below. So let's forget for one moment the other one, because obviously it's not been tested yet. If this is real and the market seems to be moving already in the direction of this chart here that came starting from 77.50, this market could continue lower into potentially 0.64 and even lower into 0.57. Okay, so this is what we have, what we see on the weekly time frame. On the daily time frame, this market has actually confirmed it's moved lower in a very technical way, and it actually is now reacting to a level that was already on the chart. As you can see, we are able to identify these levels before the fact. Let me show you two examples here on this daily time frame. Okay, and you know that I use Fibonacci in a very peculiar way. I don't use Fibonacci just to identify of participation, identify setup. Hello, Michelle, I just saw you there. Thanks for joining in. Welcome. So, as I mentioned, as I was saying, I don't use the way I use Fibonacci not only to identify potential level of where price can bounce, but also to frame a price, to explain price, to identify and explain completely on all time frames sequences of measured moves, or if you want, trends. All right. So in the past, we identified a trend, and this trend has traded nicely. The market has participated to this level because the market was extended, participated nicely around 0.7418 and went right into that first target, and then there was profit taking. So we actually, before the fact, after we saw that market moving back, we said, okay, if the market gets into this level, the next level, we're going to get involved on the long side. And eventually, the market didn't do it right away, and so we actually, when that happens, we can do something like that and just update the trades, and eventually the market went into that level and actually continued moving higher here. Okay, and now the point is that when the market moved higher, two things happened. First of all, I mean, that target was also touched, and there was profit taking, but not only. At that point, there was also the participation on the short side that we saw from the weekly time frame. All right. So, what happens when we trace, from that anchor? So you need to learn how to identify these anchors, and that's also one of the things that I explain in my FibStalker Methods coaching program. So this market actually is going to come into this anchor here, and then there will be a teller whether the daily shorts are stronger, the weekly shorts are stronger than the daily longs. All right, and of course this market also had a 50% level here, so there were multiple opportunities to participate in this market. Also, after this first move lower, the market went and tested the 77.60 a couple of times here. All right, so Long story short, this market is moving lower. Further confirmation will come after we observe how this market is going to react to 75.38. All right, and below 74.68, you can kiss goodbye this market and you can start betting on the shorts. And in fact, any opportunity to keep shorting this market should be taken. All right, so $1 US dollar from what I see is going down until it's going up. At the moment, it's going down, and we will play this market on the downside, path of least resistance. Okay, FX and Bus, are you happy with that review? Does that match your view of the market? Can you would you share your view of the market as well? And that'd be nice. If anyone else has any other pairs, please go ahead and I will review it. Todd, US dollar Japanese yen. So let's review that first, and then we'll move to the pound versus Japanese yen. Interesting market, very technical market, as you know. And this market, once it has broken the weeklies were not willing to actually push this price higher. The daily longs were also pierced at some point. And after that happened, the market gave a fantastic 50% retrace that we also traded. Actually, that was the first or last days of January, as I remember, as we took, in my trading room, we took 122 here and brought it down to 114 around here. So the market kept moving lower and hit that second target, and should not be surprised that the reaction that we saw in the last few days is coming from an extension here. So you know, the market has participated at this level and could be retesting that 111.85. FX Ambassador is suggesting. I agree with the Australian dollar analysis. Damn, I mean, I hoped you would disagree. So that we could have a healthy discussion. Okay, but thanks anyway. The US Japanese yen, then it's reacting at an obvious level here. At least, you know, to me, it's obvious enough, and that's the reason why you saw that. And that level is this one. You saw that first reaction lower there, and then every time this market has. Well, the second time, because not any time, because he has been only tested twice. The first time here, the second time here. This area, the second one, you know, has come here, 111.74. So every time this market has tested, this market has been retested. What do you think about Kuroda tonight? Well, you know, I don't really try to anticipate what is going to happen. Actually, I think that's tentative as well, and I think it's tentative today. Tomorrow there'll be anyway the BOJ tomorrow Thursday. Sorry. Yes, of course, today is Wednesday, so in Tokyo is already Thursday, so we'll see. Very difficult to say. If I look at the charts, which is often the only thing I look at, you know, if this market had to move higher, no one would have taken just, you know, 3 days before an announcement, would have taken a position here short. 111.80 was clearly sold here, and this was on April the 25th. Okay, so 2 days ago, 1 and 2. That was Monday. So FX Ambassador, as you know, I do not make any price projection which are not based on what I see on the charts. So if I have to look at the charts and how algos are positioned at the moment, I see some selling that happened here on Monday, 111.80, and so that's my best guess there. So for US dollar Japanese yen, I'm anticipating, because I cannot expect anything from the market, a continuation lower. And that will also only be negated if, for any reason, the 112.80 is placed on the upside. But since I don't have a crystal ball and I don't know what's going to happen to price, we have to be very, very careful here. And anyone who's short this market should only be short, at least if you have a risk-free trade. If you don't have a risk-free trade, it's not worth staying in this position here. Okay. So I know that some people want to have a clear answer. Yes, go up, will go down. I don't know. And if you know anybody who knows for sure, I would actually turn and run the other side. But based on the insights I have from the way algos are positioned, I would say continuation lower. Okay, and that's in line also with the weekly time frame. As we know, participation from the weekly, significant participation on the weekly, significant participation from the weekly at 111.80, which has first and second target, and the second target is very close to that 110.70, where weekly will test this market for long. That we will not be tested before. Okay. So if I can be wrong, of course, but in fact, what I'm saying is that I'm basing my analysis not on fundamentals, not on analysis of numbers and so on, which I don't do, or not that often, but rather based on what I see, the reaction that I saw already in the market. And make no mistake, this little red bar here is certainly people taking a positions as well. Now, again, my proposition is that there will be no one taking position here on the short side, and we know that we all live in a world where information is asymmetric. So I'm pretty sure that there are people who already know. Of course, it has to be like that, right? Because decisions like that are only ratified the day they are only formalized the day they are made public. But they're known maybe 2 weeks before, 1 week before. They have to be documented. There are people on the committees. There are secretaries and so on. So I don't believe a moment that nobody knows. Only the banks. I mean, there are a lot of people in the bank, in Central Bank of Japan, who know that as well. I'm stay away from the yen crosses for now. Well, we not only have to think always to negative surprise, we can also think about positive surprise. I mean, it's a sensible move, FX ambassador. I totally support that. However, in a market like the pound versus Japanese yen, which has already showed its participation in the weekly time frame, one could actually enjoy a positive surprise with this market basically putting another bar like the weekly bar we saw last week as an effect of this news. So we really don't know, and it's very difficult to say that. Now, the pound versus Japanese yen is not dissimilar from the pound versus Australian dollar. This should not surprise. And should also not surprise that basically the confirmation of price is basically the same. And you will remember that we mentioned this 156.40 a lot in the past, actually mid of February here, third week of February. You will remember that we were looking at this market getting into that area of potential participation long. That participation came, market came lower, and then again that participation came. So another important aspect of this market is that I had updated this before, and now we update that again. So same story here as for the pound versus Australian dollar. There is a potential area where this market is going to throw in into 159.28. It's a throwback, as they call it technically. And when the market gets there, again, you're gonna hopefully watch this market. And second tests are always dangerous tests, but also tests you want to wait on smaller time frames. And then this market, I believe, is going to continue higher, which might suggest for this market to continue higher, the Japanese yen has to move lower, right? So you never know. You never know. Okay, so let me take a note here. So pound versus Japanese yen. We said that this market has confirmed weekly longs and could throw into what? Into that 159.28. Okay, so another level to watch. So Todd, sounds good. I'm still holding the US dollar Canadian dollar trade tight. So let's review that. It was a good choice. I saw today on Twitter that you are panicking a little bit, and you sent that message. Not a problem. I mean, it happens, and but I suppose I reassured you in the right direction because there is no really need to take pain, unnecessary pain. Yes, the market, like a lot of other markets today, due to the FOMC statement, of course, was very volatile. But as we were holding a position from higher prices, we have to stick with the trade. And in fact, at the end, you see that the market basically retraced the full amount of what was given back in that position. Of course, I mean it's a lot, right? When you see 120 pips dissipating away, that worries you. But the point is, this is a trade. This is a long-term trade, and can you see how how randomly the market can move, and you have to let the market move. This market has been extremely technical, beautiful market, technical on the upside and technical on the downside. Okay, and we had this market trading in extensions. We captured this live because that day I was also this entry here. That day, if you watch on, if you go on FS Street, March the 9th, 2016, I was commenting, I was having a webinar and commenting charts as well, and I showed this setup basically happening live. So you might want to review that as well. And this market then offered another opportunity very clearly and gave us all the time to do that. 5 days to get prepared and hit the first target, profit taking at the first target, gap the next Sunday, and then it's going where? Todd, where is this going? You'll tell me. Please write it down. Where is this market going? The second target that I mentioned today, which is 124.80. All right, so is this level here. This is this market is going there, and when it's there, it has not done yet with the downside. You might dream, expect, pray for bounces here, but until this market gets into 120.50, there'll be no bounce. All right. So no fantasies here. We just have to follow the path of least resistance, and this market has been showing this a number of times here. I mean, there's nothing to comment on really on this market. This is an easy market to trade. I wish all the markets were this easy to trade, actually, because we have been consistently anticipating the participation points here. I was not trading as I was in Italy at the time, but then here, and now we'll wait for the next one before we get into 120. Okay, unless there is a strong move lower and a strong sell in this market, but I wouldn't I wouldn't actually bet on that. I keep bugging you about it. That's okay. All right, so yeah, we mentioned this market. I mean, we just have to have a little bit of faith. Faith is for more important things, but we have to have faith also when we have good traces and participation from algos. So okay, so just let me take some notes here. So we reviewed US dollar, Canadian dollar. Basically, we didn't say anything new in this market. We just confirmed, the market confirmed itself. That move higher was just profit taking, dictated by news, and then the market just resumed towards the natural direction where the larger time frames, daily and weekly, are positioned at the moment. So that's down into 124.80. So Todd, do you know that now? Don't ask me the level, because every time you ask me, I will kindly and gracefully respond to you 124.80. Okay, so don't worry about that. That's the easy part. It's not the difficult part. So let's do a quick time check. 7:37. I want to review last market here, very technical market, and this market, on the other hand, has not corrected its move. So, and there is a reason. The official cash rate at 4 p.m. that came in. So this market was just continuing lower after the FOMC, and then that new came. So what's the meaning of it? What's the meaning of it? To understand what's the meaning of it, Todama is asking if I'm sure about the 124.80. All right, that's for the US dollar, Canadian dollar. Now let's continue here. I want to review this for the last time here, and then I'll let you go. So first of all, we have participation in this market at 63.67. Okay, that has confirmed twice. No doubt about that. And it's interesting because it's one student who, and that's the reason why you see these letters here, who came to me this week and say, oh, I have another reading for this market. The 69.77 is a short. Yes, it is a short, but it is after a long, on a weekly time frame, has played twice. All right. Now, this move higher has not been very technical, and as soon as this market reached this potential area of resistance, which is not the final area of resistance, there was some profit taking. And interestingly enough, the market also followed up on that profit taking. In fact, it has 069.72 here to lows, as actually identified to lows here, as actually identified an area of participation in the market continue, and almost reached the first target. So if the market was left to itself, you would have seen today just a continuation lower. Okay, why? Because this area has participated, and the market, was directed towards that 068.03. Okay, now the news came in and changed the picture completely. At least it changed the picture and actually erased the short interest and participation at this level. Okay, and you have to understand this kind of dynamics if you want to understand where the market is going. So someone who not do this kind of analysis will still be looking at shorts here. But if you know where the shorts come in and then you see this, then it's going to change completely the picture for you. Okay, so what I believe about this market is that the weekly, of course, have been always in control, and they are in control, and that's not what the weekly is suggesting. FX and Basile is saying the week is going lower. No, wiki is going lower only if the 16977, which I believe will be retested now, will hold, because this market is being pushed higher by weeklies that have start trading and loading on this market at 06367. So I respectfully disagree with FX, but it doesn't mean that I know all the truth, and the market can prove me wrong always. So FX ambassador is saying the market is going lower, and I respect that. I will say to you, the market might be going higher and might be testing eventually the 75.22. Yes, FX, we disagree on something, and it's healthy to disagree every now and then. And Todd is still having a laugh there. Kidding. Thanks for the laugh. Well, this is not comedy. This is serious stuff. Okay, we analyze the markets here, but we do it with a laugh on our face. So this is it. So we will see. I hope FX ambassador is right to prove me wrong. Otherwise, I'm afraid this market is going to go to 0.7520, and it's okay to have a different view, because nobody has the nobody has the final truth or knows in advance what's going to happen. So, all right, so it's 7:42. I will start a recap right now, a summary of this session, and I'm going to start it right now. So we actually started from a review of our commodities as well as equities and futures. We started from silver indeed, and there is a good reason to review these markets, because these markets are also offered as almost all the brokers offer this market as a contract for difference, so you can actually trade these markets even if you don't trade futures. Silver has confirmed our long, imagine where, our extension long from highs to highs here, which has been tested a number of times, as you can see here. And this market is actually, so far, continuing higher. Only if we break that 1674, 77, we are going to eventually see a deeper retrace, okay? But so far, we didn't see that. So, and if that happens and this market bounces before it gets into that level that I'm going to give you tomorrow, if you keep following, we can participate to a short if that happens. After that, we reviewed the SP 500. We mentioned that this market has been, having a few days of selling, and there are some people who, of course, are selling this market. I have friends who are loaded with the triple ETF, which is too early here, and indeed this market just continue high. So I hope they will unwind their position, or they could get crunched here from the market. So where this market is going, 22.17, which is justified by the measured move that traded in the past. We then review the dollar index. Although we saw this market moving strongly lower here, the 94.35 level has held, so this market could continue higher. I reviewed then some of the markets that were suggested by the participant. Thanks a lot for your active participation today. And I want to thank again FX Ambassador, Mishari, Desi, Roland, Kerry, Dan, BW, Adinda, 4Ms, Todd, and Mr. Carrillo. And before getting into those pairs that were suggested by by participants. I actually reviewed the pound versus Australian dollar, which has traded a 50% level just below the lows here, and has the potential now to retrace a little bit on the daily, and in fact is suffering the potential participation on the short side on a smaller time frame at this level, the 191.60. But this market can continue higher, and I believe it will continue higher, and we're going to see what happens when it gets into 2051, which is a great target. If you can see it, that would be a 183 to 202. That'll be almost that'll be 1900 pips. That's a massive trade. Then we reviewed the US dollar Japanese yen, and we mentioned the fact that this market has reacted once at 111.80, which is this level that you see here. This is also the level that saw participation here. I was asked what I think about Kuroda. I have no idea. And if I have to look at this little participation here 3 days ago, before the games would have done, I would say that if this 111.80 is retested, this market could actually bounce again and continue lower. Of course, at this stage, if you don't have a risk-free trade, it's very risky to do anything. So it's better wait if you don't have a position here. Pound versus Japanese yen, it's another very interesting market. It's behaving pretty much like the pound versus Australian dollar, and with the difference that we've been following this market now for a few months, and we knew that 156.20 level here, 30 level here, there was a start of participation weekly long. That was tested once, confirmed twice. The bears on the weekly time frame escaped to another country. They just moved out, and now there's the potential for 159.32 come into play again. We then touched on the US dollar Canadian dollar. We mentioned the fact that this market is business as usual. It's approaching the 124.80. Todd should stop worrying, and I think we're gonna soon see 124.80, and then wait for this market to retrace into the next measured move short. So this market has been very, very generous, very, very technical, an incredible market. And finally, we closed with the New Zealand dollar US dollar, and this market actually had we mentioned a couple of things here. We mentioned the participation of weeklies around 63.70, and this market was supposed to have further retrace lower, but today's New Zealand official cash rate statement at 4 p.m. has actually changed the full picture, and actually this market could now retest the 69.77, and based on that, we could have potential continuation higher into 0.7522. All right, so this is it for today. Thank you very much for joining me. I hope you enjoyed the show. I hope that the information that was provided today was useful and interesting, and helps you to plan your trades or plan your exits. So if you like the show, just let people know, and very happy if you tweet about it. We will let the show grow and have even more participation. So I hope this was interesting, and good luck for tomorrow. Tomorrow is Thursday. Be careful. We are approaching the end of the week. Also, we have BOJ Outlook report, BOJ press conference, and at 7:30 a.m. US dollar advance, GDP, and unemployment claims. So another busy day. Keep your position only if they are risk-free. All right. So thanks a lot, and I'll see you tomorrow. All right. Bye-bye now.